Hey everyone, it's Tanja Trades. Welcome to my channel. I thought it was finally time to introduce myself. So here goes nothing. My name is Tanja. I'm 25. I'm from New York City, born and raised. I am a biomedical engineer turned day trader. Fun fact, I actually used to do rat surgeries for atherosclerosis research. I've been day trading for the past 3 years, and the last 18 months have been studying and applying ICT concepts. So I wanted to share 5 lessons I've learned. The first 3 will be psychology-based lessons, and then the last 2 will be technical-based lessons. So be sure to stick around to the end of the video. We're going to go over some charts. Lesson number 1, setbacks are inevitable. There's just going to be times where you take 2 steps forward and then 3 steps back. And whether you are trading through a drawdown, whether you just blew up a funded account, or whether you're just going through a difficult life event. For me personally, at the beginning of this year, I tore my ACL and my meniscus. I had to have knee surgery, and I had to take 2 months off from trading to literally get back on my feet. It was one of the most difficult things I had to do. And 2023 was definitely the hardest year of my life so far. At some point, right after the surgery, I actually ended up in the back of an FDNY ambulance for a complication. And that night in the hospital, I sort of had this realization: life is not guaranteed, so you might as well do what you want to do and just give it 110%, because you can just end up doing something you don't even like and still fail at it. So yeah, go after your dreams. But anyway, setbacks aren't really about the setback itself. It's more about how are you going to react to it and how are you perceiving it. So you can either let it destabilize you completely, or you can kind of use it to propel yourself on the way back up. The thing about day trading is that most people, when they're starting out, they kind of think that they're going to be the outlier and then everything's going to click for them right away. But no, and then you get humbled real quick with a setback. So it's almost better to anticipate it happening, so you can be better prepared for it. So kind of envision yourself going through a drawdown, or and then have a plan for it, because otherwise you're sort of unprepared and then you don't know what's going to happen. But yeah, I wish I could tell my past self, stop over leveraging in order to get past a challenge faster, get to a payout faster, and stop just oversizing because of overconfidence. The faster you rush the process, the faster you're gonna blow up. So yeah, I'd rather just take the time to do it right than take the time to do it over, because the time's gonna pass anyway. One thing that I tell myself when I'm feeling impatient is I want to do things the right way. So that's the only way for longevity in this career, is to develop good habits. Lesson number 2, comparison is the thief of joy. No matter what, there's always going to be someone that made more money than you, or that was on the right side of the market when you were on the wrong side of the market. That used to bother me a lot, because there's always someone on Twitter that caught the huge move of the day, no matter what, because you're casting a wide enough net, right? So I used to kind of get really annoyed by that. But after digging deeper, I was just like, why am I feeling this way? And I figured out it was because I was expecting myself to get it right every day and to be perfect every day. So I was putting this impossible expectation on myself, and that doesn't even make any sense, because professional athletes don't even end up on their A game every single day, every single match. And they have 1 or 2 matches a week. So how can you possibly expect yourself to be on the top of your performance standards every single day? It's not possible. So after I sort of let go of those expectations, along with gaining a little bit more confidence in my trading, it's kind of incredible how I am actually genuinely happy when I see people the same exact tweets, right? I'm actually genuinely happy because it's sort of, there's a different perspective now, right? I'm just like, hey, that means I can do it too. So it's kind of amazing after you dig a little bit deeper and you build a little bit more confidence, what can happen. But yeah, getting worked up over comparison is kind of a waste of time and energy. Like, these people are not gonna pay your bills at the end of the month. There's always gonna be someone with a better car, bigger boat, bigger house, better watch. So after a certain point, kind of becomes exhausting. If you're feeling envious, then you could also just use that envy to figure out what you want in life, because that's a good thing, because like a lot of people sort of walk around aimlessly in life and they don't even know what they want. But yeah, I think a little bit of a competition can be a good thing, but if you're always comparing yourself with others, it's a slippery slope to discontentment. But yeah, I think it's better to compare yourself with your past self, shift the focus to your own self-improvement, because at the end of the day, it's just you versus you. We're playing the long-term game here, and yeah, getting distracted by others is not playing the long game. And anyway, everyone is on their own journey. There is no race. For it to be a race, everyone would kind of have to start at the same starting line and have the same exact path. But that's not true. And you don't know what someone had to go through to get to where they are today. So yeah, everyone has their own personal journey. The third lesson is don't measure your self-worth from your P&L, because you can be green that day and not have followed your trading plan at all and have just gotten lucky that day. And then by contrast, trading is like one of the few careers where you can do everything right that day and still have a red day. What I'd like to do is rate my trading performance based on my executions, my trade management, and my mental game. So it's good to evaluate whether your emotions cause you to deviate from the plan or if you're able to stay level-headed. And anyway, if you had a good performance and a green P&L that day, like, just remember that's a lagging indicator. It's a result of the work that you put in the last few weeks and months, which is great to have, but also it's important to note your current productivity. So what I like to do to measure my current productivity is, I learned this from Cal Newport's Deep Workbook, but what you want to do is keep a tally of how many deep work hours you put in that week. So deep work is when you are in a state of flow, focused on just one thing, and you're kind of in your own little world. You don't even notice time passing you by. So whether you're spending it on completely focused on back testing, studying lectures, or just studying your past trades, I recommend just set aside 1 hour a day, and you'll be really surprised by how much further along you're going to get and how much work you can get done just by 1 hour a day to start with. It's a muscle you have to keep up with. You kind of have to build it up. But yeah, then you'll be so much further ahead of the rest of the people that are still arguing about which strategy is best. If any of these things resonated with you, make sure to give this video a like and subscribe to the channel. All right, now we're going to go to the technical sides of things. Okay, so welcome to the charts. Lesson number 4 is, after a large range pre-market session, do not trade the first hour of the New York AM session. If price moves in phases of accumulation, manipulation, and distribution, the chances are that the market will be choppy after a large move, and it will do several liquidity sweeps before showing its hand. So right here you can see before the market opened, it took this low, took it again, and then again here. So in the past, what would happen to me, I would get burned in these situations because I was looking at the 1 minute and I was using that for liquidity sweeps and market structure shifts, and they would not play out because price was in a holding pattern. So I'll show you right here. This is the same day. You can see I sort of used this inverted 1 minute fair value gap to get long, and I got stopped out and then took the low again, a little bit of an energetic push up, but no displacement up. I got enticed back in, saw this CE of this wick and got back in again. And yeah, I got stopped out. So if I had just waited for on the 5 minute for a little bit of the market showing its hand, because right afterwards I got stopped out, it showed its hand after an hour into the session. You can see this displacement here on the 5 minute. And in high resistance liquidity runs, it offers these optimal trade entries. See, price took a long time. It took all day to get back to these highs. So there's no reason to be impatient. So yeah, another example is right here. When I learned my lesson a little bit, I waited. The 5 minute displacement was shown here. And what I did, I just got long under a low. So I'll show that on my screen now. I got long here and I put my target as yesterday's low. So right here, put my target at yesterday's low. If you turn on regular trading hours, you'll see that. And yeah, I mean, another example right here. This gave you the optimal trade entry. Large retracements and price took a long time. Okay, the last lesson is if I got in a trade on a low risk sell, and then I take a partial profit below some lows, and then I get stopped out at break even or in profit, I do not re-enter the same trade right away. I've gotten burned in the past by trying to do this and then getting stopped out a couple of times because price was either consolidating in a high resistance liquidity run or it needed to do a 3 drives pattern into a deeper PD array. So instead, my new rule is for me to re-enter the trade, price has to prove itself to me. It's in expansion mode. So I wait for a break of a short-term low with a fair value gap aligned with it. And then that's way more likely for the trade to play out. And here's another example from CPI recently. So you can see we had a huge move down and then it digs into this weekly buy side liquidity. And during lunchtime, it does more stop hunting. So here I'm waiting until a low is broken with a fair value gap. Nice silver bullet entry. Boom. But yeah, if there's no break of a low with the displacement, I'm not entering. So yeah, seek low resistance liquidity conditions after price is confirmed it's in a hurry to get somewhere. So yeah, if you made it this far, thanks so much for watching. Let me know in the comments how long you've been trading for and what's one thing you've learned. Check out my other trade recap videos and I'll see you next time.